whatever you do, I think you can understand the value of being able to leverage other people's time so that you can invest passively into those deals. If you buy a single family house or a duplex or a quad, one of these landlord issues come up, then that's your problem to deal with. And we've had plenty of those phone calls. But in a syndication, because we're leveraging other people and their time and talent, we don't have to take those calls. So we get the benefits of investing in real estate without having to do any of the work. We're going to talk today about one of my favorite topics, which is why I love investing as a passive investor into real estate syndications and why you should too. So, as you know, we're a syndication company. What that means is we connect our passive investors with strong operators and sponsors. We vet these deals as they come in, and we vet the people that are running the deals the day to day. So we're not actively involved in the changing of the toilets and the changing of the light bulbs, and we manage the managers, right? We're doing a couple of deals in Columbus right now, and our passive investors are the ones getting the updates weekly, monthly, bi-monthly, and they're getting told what is going on at the property. And so here's a quick story. We have 150 units in Columbus. We're turning this one property over, and we have some tenants that we're in the process of evicting. Right, so one of those evicted tenants decides that on the way out, they're going to flood the apartment. And now we have to deal with that flood. And if that flood goes into somebody else's apartment unit, now this is the issue of being a landlord. So we've had to deal with that on our end, and our passive investors don't. But let me give you a little background, how we got here. So as you know, most of you know, we came from the single family fix and flip world, and we had to manage those things day to day. We had to manage the construction, people not showing up, swapping out all the toilets, and all that stuff. And when we started to get involved in rental property as well, same thing. We're looking at being a passive investor versus an active investor. So we do both, and the active investment side has been the biggest headache, frankly. So we have pivoted our entire operation because we have kids and wives and things that we want to do with them to what the Kiyosaki cash flow quadrant calls the investor bucket, which is a passive investment, not an active dealing with the tenant phone calls, dealing with that flood and things like that. So that's where we like to be, and that's how we have pivoted our business so that we can focus on being the passive investors right alongside with the people that invest with us as well. So all that to say, we're moving from the active investing world to the passive investing world. There's a number of ways to do that, but our favorite is syndication. You've heard us talk about syndication before. Simply put, syndication is investing alongside a group that's buying, we do self-storage facilities, we do multifamily investments, and many hands make light work, right? We decide to invest alongside of our investors with a group, and then this group pools their money together so that they can invest together. That way we can buy bigger projects and things like that. So basically we're leveraging other people's time, effort, and energy and replacing it with ourselves. And, if you're a parent or, spouse or business owner, whatever you do, I think you can understand the value of being able to leverage other people's time so that you can invest passively into those deals. If you buy a single family house or a duplex or a quad, one of these landlord issues come up, then that's your problem to deal with. And we've had plenty of those phone calls. But in a syndication, because we're leveraging other people and their time and talent, we don't have to take those calls. So we get the benefits of investing in real estate without having to do any of the work. That's right, you heard me. We get to invest in real estate without having to do any of the work. So we get all the benefits, right? The high returns, the depreciation, the tax benefits, things like that, without having to do the day-to-day. right? Renovations are running behind, not my problem. Contractor didn't show up today, not my problem. Tenant didn't pay, not my problem. I mean, enough of them not paying, right, would turn into my problem. But I'm saying the day-to-day stuff, this tenant needs to get evicted, not my problem. I get to spend more time with my wife and kids and not have to deal with the day-to-day aspects of running the business. So what's the catch, right? There's no catch. I mean, it's pretty straightforward. In a syndication, everybody's working together and then everybody wins. It creates that win-win situation. So, we're really good at building our relationships with our investors, and we invest our capital alongside of them. And the operators are good at finding those deals and communicating that information to us so that we get to passively invest, right? One of our friends uses a great analogy of, the general partner or the sponsor, right? That's what the owner operators are called. They're called sponsors or general partners. They're like the pilots on the plane. And the passive investors are like the ones that go along for the ride in the back. So the pilots are driving, right? They're flying. They're doing the day a warning buzzer goes off. They have to deal with it, right? I'm in seat 7A. I'm not dealing with that. So they get to do their job and we're along for the ride, but we still get the benefit of getting there, right? And the pilots obviously get paid. So do the sponsors, and we as passive investors alongside, by putting the deals together, by putting our investors together with these deals and with these sponsors that we vet and we do all the heavy lifting for, we partner with that sponsor and they pay us, right? So when you invest in a syndication, at least with us, there's no additional fees. You don't pay us anything, right? We work that out with the sponsorship and we share in the general partnership. So that's how we get paid. And then the limited partners, they're along for the ride. They're getting their returns that is laid out in the private placement memorandum. So, hey, Steve, what are those returns? They vary by deal, right? So you're going to have to go through, and we'll do another episode here where we'll walk through a previous deal so you can kind of see the numbers and see the metrics. But it's true. It just varies deal by deal. Some deals are going to get higher returns because there's more risk. Some deals are going to get lower returns because there's lower risk. I mean, it typically is more risk, more reward. And we like to hedge our bets with both types of properties. We like to do stabilized cash flowing properties that have some value to be added through either management expertise or bumping of rents or some interior or exterior upgrades, things like that. And then we've also done projects, ground up development, right? We've built a 130,000 square foot self-storage facility from just trees and dirt, and now we have a fully functioning. So a little bit higher risk on the new construction stuff. You have lease up risk and you have time, and, but there's a little bit more reward on those deals. So every deal is different. Just, as you contact us and you see what the returns look like, we can walk you through some of our projections on either a deal that you're investing in or that you're looking at, or some previous deals so you can kind of see what that looks like. So how do you do it? How do you invest in a real estate syndication? It's a little bit different than going out and buying a rental property, right? You don't have to go set up times with a broker to go look at properties and run your own spreadsheets. And it's actually very interesting. And this is part of the heart behind the podcast, is a lot of people don't know that this even exists. The SEC and their rules make it very difficult to advertise these types of things. So the only way that you would know to invest in a real estate syndication is if you know somebody who does real estate syndications. So luckily for you, now you do know someone, it's us, that will put these deals together and that you can participate in. So you have to have what they call a substantive relationship with us. So this is why we always invite people to come and get to know us. We get to know you and can see if these types of things fit your investment parameters, right? So first and foremost, we're investors. We want to see where where are the markets, who are the sponsors that are running the deal? What is their track record? What does the deal look like? So we're underwriting, we're looking at all of these deals and all of these sponsors to see what fits our very strict criteria. If we're going to invest our own money into the deal, we want to make sure that it's a solid deal, and then we open that opportunity up to our investors. So we touched a little bit on how we put those deals together, and then how do we get paid? And sometimes that's a question that comes up, like, are the limited partners paying us? Like I said before, They're not. We participate with the sponsors that we're vetting, and they share in the profits with us. So what I like about our structure is that the investors are making their returns first, and then as the owners, we eat last, right? So depending on the structure of the deal, you have to see if they have what they call a preferred return, meaning they get paid first, or not. So if you have questions about preferred return, common equity, things like that, make sure you reach out to us as well. And for putting these deals together, we get a cut of the sponsor's equity and we get a cut of the sponsor's fees. And it doesn't come out of our investors' portion, it comes out of that portion, and everybody is happy. So if you're ready to learn more and how to do this yourself, you have to go to integrityhg.com. You could also go to freefromwallstreet.com and sign up for our investor club, the Integrity Investor Club. So on there, once you sign up, we'll get on a call with you. We'll talk about what your investing goals are, what deals might meet your criteria, and then we'll walk you through the steps of the process for the next deal that we're going to do. So that's it. It's pretty simple. We love real estate syndications. That's part of why we're always talking about it, is because we want to invite people in to get to understand that they can participate too. So if you're done with the headaches of being a landlord, make sure you're signing up for the IHG Investor Club and get started on your path to becoming a passive investor and create some of that passive income for yourself, that generational wealth, take care of some of the tax benefits. There's a ton of reasons to do it, but so go to integrityhg.com. Make sure you're signing up for the Investor Club. If that's a little bit too much commitment for you, it shouldn't be. But if it is, go to our website anyway and sign up just for our newsletter, or sign up for the Private Real Estate Investing 101 course. It's a 7-day course that we're going to train you on how to find out if you're a good fit to be a private or passive real estate investor. So that's it. It's a short one today, but it's a big topic. Make sure you're reaching out to us. If you have any questions, thank you as always for tuning in to the Free from Wall Street podcast, and we will talk to you soon.